Basic concepts of trading. You are welcome to the Trading Lab YouTube channel. Thank you for joining us today, and we look forward to bringing you more valuable information and discussions on basic concepts of trading in this video. Let's get started. Kindly like the video, share, and don't forget to subscribe as well. Thanks. Trading securities can be a great way to grow your wealth and achieve your financial goals. However, for anyone new to the world of trading, it can be overwhelming and confusing. If you're just starting out in trading, it's essential to understand the basics of buying and selling securities. In this video, we'll cover everything you need to know about trading securities, from what they are and why people trade them, to the different types of securities and how they're traded. So, whether you're looking to invest in the stock market, bonds, or other securities, this video will help you to understand the essentials of trading and make informed decisions about your investments. 1. What is trading? Trading is the act of buying and selling securities, such as stocks, bonds, options, and futures, with the intention of making a profit. It is conducted on various platforms, such as stock exchanges, over-the-counter markets, and electronic communication networks. Securities are financial instruments that represent ownership in a company or a debt owed by a company or government entity. Stocks, also known as shares or equities, represent ownership in a company. When you buy a stock, you become a shareholder and have the right to receive a portion of the company's profits in the form of dividends and the right to vote on important company matters. Bonds, on the other hand, represent a debt owed by a company or government entity. When you buy a bond, you are essentially lending money to the issuer, who promises to pay you back with interest at a later date. Options and futures are more complex financial instruments that allow traders to speculate on the price movements of underlying assets, such as stocks, bonds, commodities, and currencies. Trading can be done by individuals, institutional investors, and professional traders. It can be done for various reasons, such as to generate income, hedge against risks, or simply for speculation. 2. A brief history of trading. Trading has a rich history that spans centuries. The first recorded instance of trading dates back to 1531 BC, when ancient Egyptians traded goods such as gold and spices along the Nile River. As trade routes developed and expanded, so did the nature of trading. By the 16th century, European explorers had established trade routes with Asia, Africa, and the Americas, bringing new goods such as tea, coffee, and tobacco to Europe. The first stock exchange was established in Amsterdam in 1602, when the Dutch East India Company issued shares to the public. This allowed investors to buy and sell shares in the company, and paved the way for modern securities trading. In the United States, the New York Stock Exchange was founded in 1792, and quickly became the largest stock exchange in the world. The rise of technology in the 20th century had a profound impact on trading. In the 1970s, electronic trading systems were first introduced, allowing traders to buy and sell securities from their computer screens. This revolutionized the industry, making it faster, more efficient, and more accessible to a wider audience. Today, trading has become a global phenomenon, with millions of investors buying and selling securities every day. From ancient Egyptians trading along the Nile to modern-day traders using cutting-edge technology, the history of trading is a testament to human ingenuity and the power of commerce. 3. Types of securities. When it comes to trading securities, it's important to understand the different types of securities available for buying and selling. Here are some of the most common types of securities that you'll come across. 1. Stocks. Stocks are one of the most popular types of securities. When you buy a stock, you're buying a small piece of ownership in a company. The value of your stock will go up or down depending on how well the company is performing in the market. 2. Bonds. Bonds are essentially IOUs issued by companies or governments. When you buy a bond, you're lending money to the issuer, and in return, you'll receive regular interest payments until the bond matures. 3. Mutual funds. Mutual funds are essentially a collection of different stocks, bonds, and other securities. When you invest in a mutual fund, you're pooling your money with other investors to buy a diversified portfolio of securities. 4. Exchange-traded funds, ETFs. ETFs are similar to mutual funds in that they're a collection of different securities. The main difference is that ETFs are traded on an exchange like a stock, and their price fluctuates throughout the trading day. 5. Options. Options give you the right to buy or sell a stock at a certain price within a certain time frame. Options can be a complex type of security, and they're generally used by more experienced traders. Understanding the different types of securities available is a crucial first step when it comes to trading. By knowing the basics of each security type, you'll be better equipped to make informed trading decisions. 4. Understanding the stock market. The stock market is a place where securities such as stocks, bonds, and mutual funds are traded. Investors come to the stock market to buy and sell these securities with the goal of making a profit. The stock market is an important part of the economy because it provides companies with a way to raise money by selling shares of their stock to the public. In exchange for buying stock, investors become part owners of the company and can potentially earn returns if the company performs well. The stock market is made up of exchanges such as the New York Stock Exchange, NYSE, and NASDAQ. These exchanges have specific rules and regulations that companies must follow in order to list their stock. Once a company is listed, their stock can be bought and sold by investors. When buying and selling stocks, it's important to understand that the value of a stock can fluctuate based on a variety of factors such as company performance, economic conditions, and world events. This volatility can make investing in the stock market risky, but it also provides opportunities for investors to make significant returns. Overall, understanding the stock market is crucial for anyone interested in buying and selling securities. By keeping up with market trends and staying informed on the companies you invest in, you can make educated decisions and potentially earn a profitable return on your investments. We hope you found our basic concepts of trading video helpful. Thanks.